Okay, so we were working on the case called the stylistic, and so we were doing the first part, right, which is about doing the first steps, right? So prepare the revenue, prepare the production, prepare the direct material, and prepare the direct manufacturing. So you just to make the link with what's gonna follow, we can see direct material, okay, direct material, and direct labor. Okay, so what we are doing for the moment is we are dealing with direct costs, just preparing for the next step. But I know that I just stopped before so we were doing the step number 2 and 3. I think it's correct, and then we were doing a step number 4. And can you mute your mic, please? Thank you. And so we were like this, right? We were like this. We were saying that we have this amount. I think everyone was okay with this amount. They are on yesterday's video, by the way, so no problem. So we were just doing this number 4, schedule number 4, and someone asked me, can we wait a few minutes? So I said, okay, I'm gonna erase what I wrote, right? And we're gonna make it tomorrow together. So the direct cost is quite easy because we just need to find what is the number of hours we spend to do some casual and what is the number of hours we spend doing some deluxe, okay? And we need to find the cost per hour. For the cost per hour, it's quite simple. We get it here, okay? So it's no big deal. Now we need to find the number of hours. So we can find it here, okay? So each time we do one casual table, it takes 4 hours. And each time we do one deluxe table, it takes 6 hours. Okay, so it's kind of artisanal work, right? So we just need to do that. So what is the quantity? Well, the quantity for casual is we need 4 hours time the number of tables we need to produce. Okay, so we need 240 hours, 240,000 hours. And each time we're gonna work 1 hour on a table during the year, it's gonna be $20 that we pay, certainly including charges and everything. Okay, so so the total is this, right? And for the deluxe, we do the same thing, right? We need 10,000 tables to be made, and each time we make one table, we need 6 hours. So we need 60,000 hours, and each time we're going to pay $20. It's going to cost us $20. So we get a total of 1.2 million. Okay, and so we can maybe sum them up to find the total. So sorry, I've got here. I got a problem. It's not 60,000. Yes, it is. No, here I got a problem. Okay, there's a problem in my formula. Okay, this is correct now. So the amount were okay, but the formula was not good. Okay, so we got 6 million total. We get 6 million total, so that should be okay now. Yeah, D23, thank you. So yeah, so it was just a formula prime. So now we have the total budget, right? So here, actually, we are talking about direct cost. Direct cost, and usually the direct cost, you have direct material and direct labor. So we know that we get a total budget of 9.95 million for the purchase needed for the direct material. So sorry, we will use produce this one. So we're going to produce for 10 million, and for the direct labor budget, we're gonna use 6 million budget to pay all the people who are working in the manufacturing process. Okay, so this is what we have. So now I told you to have a look at the next section in the document, because I know it's not so easy. So I hope you read it. I'm gonna re-explain very quickly. Just let me check if the access. So it failed. So okay, so it's still failing. Okay, for the Zoom page. So okay, so what I want you to, so now we're going to discuss manufacturing overheads cost budget. Okay, so just to explain what it is, in case you're not familiar with it, let me share my Blackboard. Here it is. So you must see my Blackboard somewhere. I don't find it. Let me find it myself. It's here. And I'm going to put it on my other screen. Okay. So I prepared something. So can you see it? It doesn't look like you can see it because I cannot see green around it. Okay. So I don't know why sometimes. I think when I change this, when I put a file from one screen to the other while I'm sharing, I think it's losing the sharing. Now you should see it. So I didn't. It's strange, but maybe it's one of the pitfalls of Zoom. Okay, so I summarized here yesterday when I was thinking about how I'm gonna explain. Do you want to use? So yeah, so I was okay, no problem. Okay, so here I was I was thinking about this yesterday. I was thinking about what I write on the board when I'm in Vietnam when I explain this part. Okay, because I know usually students need some additional explanation. So let's try this way. Okay, I just wrote in my Excel file what usually I write on the board. So what you need to understand at that point, I don't know if you are familiar with this kind of topic or not, if you did that in the past in your university or if you practice that in accounting. But here we are, right? What we are doing is cost calculation. So we are doing some what we call management accounting, right? Management accounting. So what we want ultimately is to calculate the full cost of one product. Okay, so that can be the casual table or the deluxe table. Okay, so what we want to do is to calculate the cost of one product. So we need to allocate the cost of accounting to one product or the other. Okay. Okay, so basically what you all what you have in your accounting, all the costs you can find, okay? Purchases, taxes, transportation, electricity, and so on and so on. You need to be able to, say to yourself, okay, is this cost linked to casual tables or is it linked to deluxe tables? Okay, so you can allocate all the costs that you have in accounting, which are recorded by nature of the cost. Is it a purchase? Is it a tax? Is it a wage? Is it electricity, and so on, into costs that you allocate or to deluxe or to casual tables. Okay, so you need to find a way to allocate the cost to one product or the other. So then this is what we are doing, right? Since yesterday, this is what we are doing. We didn't have this problem in the previous case, Gordon case, because there was only one product. Here we have two products, so this is a new problem for us. And so in a management accounting, we can say that we have two types of costs, okay? Direct cost and indirect cost. Okay, there are different ways to classify the cost. as I said, you can classify the cost by nature. So what is the nature of the cost? Purchase, electricity, wage, and so on. So this is financial accounting, okay? Financial accounting. Then you can also classify sometimes the cost between, according to their behavior. So you can say the cost can be variable or the cost can be fixed, okay? And so you can calculate a break-even point. This method works quite well when you have also one unique product, okay? Because then you can calculate the quantity you need to sell to, to break even, as we say. And then you have this method, which can be the traditional method or the ABC method, okay, activity-based costing method, for which you will be able to allocate the cost according to the fact that there are direct costs or indirect costs. For the direct cost, usually we do not have any problem because the cost can be directly linked to one product, okay? So usually you have direct material and you have direct labor, okay? So this is actually what we did, okay? We did that just before. We did that yesterday together. Where is it? We did that in the Excel file yesterday. Okay, when we did this, okay, we did the direct material budget, and so what we did is that we calculated the quantity we need of each of the components, and we have a price per unit, okay, or cost per unit. So we calculate the total that we go for casual, the total that we go for deluxe. So here, for example, we can see that we have actually the total amount of red oak that we need to allocate for the casual production, and we have also the total for red oak used to do some deluxe. Okay, so since it's a direct cost, it's not a big problem because we know the cost per unit of this raw material. For example, we know the cost per unit. So red oak, we have it here. Okay, 7. And so each time we use 1 unit of one board foot of red oak, of course, it's like we have a cost of $7 that we allocate to our product. Okay. So this one is not a big problem when we have direct cost. The problem comes from when you have indirect cost, of course. So when you have indirect cost, we have a problem because we are talking about cost that cannot be linked to one product only, okay? So these costs are generated for both the casual and the deluxe table, okay? So the method we must do is this one. We need to, so we have a total amount. So we don't know how to split this total amount between the two products, okay? So the method is as following, ABC method or traditional method. Okay, so we need to find a way to allocate the cost to each of the two models. Okay, to do so, we firstly need to gather this indirect cost into cost centers. Okay, so in the case of our, I hope you read, right? In the case of our case, the stylistic case, we have 2 cost centers which are identified: manufacturing, operating overheads, and which is for 9 million, and machine setup overhead cost, which is for 3 million. Let's have a look if you want, in the case what we have. Okay. So as I said earlier, the use of activity-based cost drivers, such as we use activity-based costing. Okay, and so or maybe we can have a look later on. What you have here the two manufacturers. So okay, you have the manufacturing of a cost budget, which is given here. So this total amount, this is the best we can see here. This is the total amount we need to allocate. This is the total of the indirect cost. We have 12 million of indirect costs to allocate. Okay, where do they come from? They come from, you know, what we see in the financial accounting. You can see supplies, indirect manufacturing labor, power, maintenance, depreciation, supervision, power, and so on. And so we have some cost here that we identified in the financial accounting that we've been able to say, okay, these costs that I found in my financial accounting are linked to the manufacturing activities. Okay, so the use of electricity for this section is used to manufacture the product. Okay, so each time I manufacture one product, I have power for 2.1 million. Okay, for the total of the year. Okay, so we are not able to allocate that directly to the product, but we are able to say, okay, this cost is a manufacturing cost, indirect manufacturing cost. Okay, and we have a second center for which we identify some costs for 3 million. Okay, which is machine setup overhead cost. Okay, so we got 3 million, which is linked to also some power, some depreciation, supervision, but which is not linked to manufacturing the product, but to setting up. Okay, to setting up the product. Okay, so when you go from one product to the other, you need to change the machine settings and so on and so on. Okay, so this is a second type of activity that generates some cost. Okay, so we have in our, if we want to manufacture deluxe or casual table, we need to do some manufacturing activities. And there is a total of $9 million for these manufacturing activities for the year. And we have some setting up activities for 3 million, okay? And so these setup activities also need to be allocated to the product. So we know, and this is the first step we do, we identified from what I said in my blackboard, okay? So we need to find a way to allocate. So we need first to gather this indirect cost into cost centers. This is what we just saw. Okay, so we got 2 cost centers. Okay, maybe I'm gonna put it a little bit lighter because it's not very nice to read, I guess. Okay, so we identified the 2 cost centers. So we have 9 million of manufacturing operation overheads and 3 million of setup. Okay, so we have a total of 12 million of indirect cost to allocate. Okay, and so this total of 12 million is just separated into two cost centers. Okay, manufacturing and setup. Okay, so we have 2 activities. Sorry, 2 activities. Manufacturing. Okay, manufacturing and setting up. And for each of these 2 activities, we have been able to let's say, identify the total amount of money we spend for that. We spend $9 million per year to manufacture in indirect costs, and we spend 3 million of indirect costs every year, or this year, or with next year, because it's a budget, to setting up. Okay, so we have 9 million that we should spend indirect costs for manufacturing, and 3 million we should spend in setting up cost in indirect costs. Okay, so now the question, actually, our problem is that the indirect cost both for casual and deluxe tables. So this means that the 12 million we have here, okay, we have been doing some casual and some deluxe with it, but we don't know when, we don't know how, we don't know how to split the 12 million between the deluxe and the casual. Okay, this is our problem. So to solve that problem, we firstly classify this 12 million into 2 drivers of this cost, okay, 2 generators of this cost: manufacturing activities and setting up activities. So already we know that this 12 million can be split into 2 types of activities: manufacturing activities for which we have a total amount of 9 million, and setting up activities, for which we have a total amount of 3 million. Now we need to find a way to allocate the 9 million between deluxe and casual tables, and to allocate the 3 million between the deluxe and casual tables. Okay? To do so, we need to go for the next step, which is to find what we call a cost driver, meaning a fair measure of the activity of the cost center. So we need to find a way to measure what is the manufacturing activity proportional to, okay? And what is the setting up activity proportional to. And so the case is saying that, because actually in this part, I don't ask you to calculate so much, because I know it's complicated, so I give you a lot of calculations already. You don't have a lot of work to do. You just have to understand what I say, okay? So coming back to the case, so we know that one, 9 million, 12 million. And now we need to identify what is the cost driver of each activity, okay? So I think we have the information maybe even earlier. Yeah, there are two cost drivers for manufacturing labor hours and setup labor hours. So we can see that we have two drivers, manufacturing labor hours and setup labor hours, okay? So direct manufacturing labor hours is the cost driver for the variable portion of manufacturing operations. So actually, we don't care about variable or fixed. This is the same driver. And setup labor hours is a cost driver for machine setup. Okay, so if we come back, so it will the 9 million and the 3 million we spend will be proportional to the 300,000 direct labor hours for the 9 million and the 15,000 setup hours for the setting up indirect cost. Okay, so I say it again. For the manufacturing cost, the 9 million, it's going to be proportional to the direct manufacturing labor hours. So each time we spend 1 labor hour manufacturing, we should allocate a part of the 9 million. Same thing for the setup labor hours. We have identified that during 1 year, we're going to have 15,000 setup hours, okay? And so each time we're going to spend 1 hour setting up, we should allocate a part of the 3 million that we have. So I'm coming back to my blackboard. Okay, so we need to find a cost driver, meaning a fair measure of the activity of the cost center for each cost center. So we identified 2 cost drivers in our case. So direct labor hours for manufacturing operation, okay? So that means that the 9 million of manufacturing indirect cost will be allocated to the 2 products, casual and deluxe, in proportion to the number of labor hours spent on each product. Okay, so let me find a way so you can see everything here. Okay, let's do this and let's do this. Okay, and the 3 million of setting up. There is one mic open. I cannot mute all because I'm not host today, so I cannot mute everyone. Or if I mute everyone, I mute myself. This is a problem actually. So I need you to identify when you have a mic open. So the 3 million of setting up indirect costs will be allocated to the 2 products in proportion to the number of setting hours spent of each product. Okay? So there is one person in group 1. Tong, your mic is open. And Can's iPad, your mic is open as well. Okay, so this is what we can say. Okay, so we got the 12 million we need to allocate. So already first stage is to put that into manufacturing or setting up. So we got 9 million of indirect costs which are linked to manufacturing activities, and we have 3 million which are linked to setting up activities. And now we've been able to identify how we can measure the activity of each center. The manufacturing operations will be measured with the direct labor hours. So the 9 million of manufacturing indirect costs will be allocated to the drop product in proportion to the number of labor hours spent on each product. For the setup hours, we got the 3 million, and to be able to allocate that between deluxe and casual, we will be doing that in proportion to the number of setup hours we spend respectively on casual and on deluxe products. Okay, so we're nearly done. So we got a total of indirect costs, which is 12 million, sorry. This amount has been allocated between two cost centers, 9 million for manufacturing indirect cost and setup indirect cost for 3 million, okay? How do we measure the activity? The manufacturing indirect cost will be linked to direct manufacturing labor hours, and the setup indirect cost will be linked to setup hours. How many units of the cost driver do we have? Okay, so we come back to the case just for me to check with you. Okay, so we have 300,000 direct manufacturing labor hours. Okay, that we plan to spend for 2021, and we got 15,000 setup hours that we plan to spend for 2021. Okay, so I can use that here. So 300,000 hours for the direct manufacturing labor hours and 15,000 hours for the setup hours, okay? And so now we're gonna calculate what we call the cost per unit of the cost driver, which is simply 9 million divided by 300,000, okay? So it means that each time we spend 1 hour of labor, we need to allocate $30 of indirect manufacturing cost to the product. Okay? And for the other one, each time we spend 1 hour of setup, we need to allocate $200 to the product, okay? So this is why when we come back to the case here, we can go now to manufacturing overhead costs. So it's already prepared because they didn't want us to lose some time with it. So it's already calculated, but we find all what I explained here, okay? We have all the financial costs which are linked to the manufacturing activity with a total of 9 million here. We have all the machine setup overhead costs with a total of 3 million here and the total of 12 million, okay? We identify the number of labor hours and the number of setup hours, okay? And so we can calculate directly the cost per unit. 9 million divided by 300,000, so that's $30. So each time we spend 1 hour of labor on one product, we should allocate $30 of indirect manufacturing costs, okay? And each time we spend 1 hour of setup, we should allocate $200 to the product. Okay, so in terms of calculation, there's nothing to do on this part. I decided to let the calculations already finished in the Excel file. Okay, so because I know it's quite complicated. But of course, we're going to need this information for further calculations, because now that's going to be your job, especially in the ending inventory, to allocate this indirect cost to the products. Okay, but I wanted you to have a sort of a reminder. I know it's not easy, this part, and I know that not everyone among you have been working with these aspects already. So I try to find a way to introduce you to these aspects, but maybe not to lose so much time with it. So that's why I've been explaining. I hope that the video is working on my friend who has been able to record, so you can watch it again. Well, remember that the last years they have only one time the explanation, so not so easy. Also, I will share the Blackboard, right? Not the Excel file of the stylistic case, but I will share also the Blackboard, so you will have some information. You have been able also to hear my explanation. So that was the tricky moment of the day. I'm sorry that it's already at the beginning of the class. Do you have any question about what I explained about the indirect costs? You can use the chat or you can use the mic as you prefer. Okay, so there are two options. Or it was very, very clear and everyone is very impressed and understood everything. Not sure. Or you need time. You need time to rethink about this, maybe, and you know, get into the details. And certainly some of you guys, for some of you guys, it was clear because you did that already in the past. Some others, maybe not. No big deal. Again, it's not a part where I ask you to calculate stuff, okay? So maybe what we can do is to move to the next step, meaning the ending inventory budget, so we can see how you handle it, okay? So here you have this schedule 6A, for which you need to calculate what is the cost for 1 unit of each product. So it's going to be a good time for us to see if you have understood what we did so far, okay? So I'll let you 10 to 15 minutes to evaluate what is the cost for 1 unit of casual that we produce and what is the cost for 1 unit of deluxe, okay? So I don't know if you're familiar with this, but when you manufacture products, you of course evaluate the inventories at a production cost. Okay, so this is what we do here. We try to calculate the production cost of 1 unit of casual for the year 2021 and 1 unit of deluxe for 2021 as well. So the production cost is actually all the costs you gave to manufacture the product. So of course it takes you some raw material, it takes you some labor, okay? So that will be direct costs, okay? This is direct cost, this is direct cost, this is direct cost, okay? And that will be also a part of the 2 cost centers we discussed just now, okay? Some manufacturing overheads and some setup overheads, okay? So I'll let you some time to work on this. Let's say 10 minutes at least, maybe a little bit more, and we discuss the result together, okay? Can someone say okay in the chat or something, because yeah, it's okay. So okay, so I'll let you. Thank you, because sometimes I don't know if you can hear me. I'm just afraid. So yes, please work on Yes, the person can mute the iPad. I'm going to try to. I think I cannot mute everyone. Huh? I don't have the right. Once you're working, I'm going to check if I can access to my Zoom account now. So I'll stop sharing for a while.
Anh có phần mềm thì mới record được. Nhưng mà anh record thế này liệu nó có lưu được tiếng không hay là có? Bình thường anh vẫn lưu mà. Nhưng mà đấy là thế trường hợp đấy là anh đặt tai nghe hay là anh để lại? Anh chạy bằng cái của anh chứ mà chạy cái này. Thôi nếu không sao? Anh chỉ là vật thế thân thôi mà.
Thầy gọi anh là bạn đấy đấy.
Bạn
anh
thế lúc nãy nói cái gì ạ? Nói về phân tích mấy cái direct cost và indirect cost này. Anh record từ lúc học, chắc chắn hình thì có, tiếng thì không biết.
Thầy việc bảo là thầy mất quyền làm admin của cái này rồi nhưng mà thầy không record là có tự đấy.
Em về nhà chưa? Ồ thế tốt, không có record đâu nhá. Trước đấy cái tab đúng rồi. Bây giờ tính cái cost per unit of input. Cost per unit of input thì cost per unit of input thì sẽ phải bằng là nó sẽ gồm cả material các thứ chứ nhỉ. Input per unit of output, input per unit of output, cost per unit of input. Có hiểu nhỉ? Entity table produce, number of table produced per batch, number of batch, setup time per batch, tức là thời gian, total setup hours. Năm mươi mà nhân với cả bằng bao nhiêu? 50 nhân với 1.200 để xem là đang tính cái 60.000. 50 nhân 1.200 thì bằng 60.000. Set up time per batch, tức là 10 tiếng thì mình mới làm được một batch, đúng không? In number of hours, tức là 10 tiếng thì mới làm được một batch, đúng không? Total setup là 12.000 giờ. 12.000 giờ. Bây giờ setup hour per table là 0.2, tức là mình sẽ mất 0.2 giờ để làm ra một cái bàn casual và 0,3 giờ làm trong cái bàn deluxe. Number of overhead hours là tất cả số giờ, đúng không? Trong một năm, đúng không? Để cái 30.000 này chia cho 0.2 ra cái gì? 1.500.000. 1.500.000 là dưới này đấy. Supplies này. Supply là 1.500.000 đấy. Thế là mình sẽ làm ra được 1.500.000 cái gì nhỉ? Không, cái van ở đây nó chỉ là 60.000 thôi mà nhỉ? 300.000 chia 0,2 để ra cái gì? 1 giờ để làm được một cái bàn đúng không? Total là mình sẽ làm được 1.500.000 cái bàn. Nhưng mà đây mình chỉ cần có 60 thôi mà, 60.000 thôi mà, 60.000 đúng không? Ở trên cái quantity to be produced đúng không? Deluxe là 10.000, tổng là 70.000. Total setup hour. Cái setup hour này là setup by per page. Để làm gì nhỉ? Cái setup hour này là để làm gì? Setup time per page, setup hour. Total setup hour. Setup là gì? Tức là để làm hả? Setup là làm hả? Đấy là direct đúng không? Direct chứ. Setup và cái nào ở chung? Setup. Được chưa? Manufacturing và setup thì là direct. Còn lại indirect lại là cái khác. Đây, anh có
Indirect chỉ có hay cuối thôi anh.
Indirect là gồm có
Manufacturing overhead với cả machine setup overhead, còn lại là ba cái đầu direct.
thầy có ghi ở đây này. Ending này, thầy có ghi này. Manufacturing overhead và machine setup overhead là indirect. Giờ nhiều đấy. Cost center và cost drive.
Cái input per
đây này là 12 triệu, đây này thầy chia lại luôn là 12 triệu là có đều là indirect hết.
Đúng.
Là indirect manufacturing 9 triệu và setup indirect cost là 3 triệu. Tăng đấy 9 triệu để thầy có direct manufacturing cost và 3
Total manufacturing hours là 30 và total machine setup hour là 200. Number of hours. Total manufacturing operation. Number of overhead tức là tổng số nhân công à? Tổng số giờ nhân công à?
đâu rồi?
Cái dòng số 8 number of overhead hour ấy. Chà. Number of overhead hour là gì? Tổng số nhân công à? Tổng lượng giờ nhân công của cái công ty đấy có đúng không? Đây này, direct manufacturing labor hours is a cost driver này. Và là portion of manufacturing operation overhead. Fixed component of manufacturing operation overhead type. Capacity là 300.000. Tổng số 300.000 là capacity, là tất cả nó sẽ có khoảng tầm 300.000. Total nó là 9 triệu thì suy ra là 30 đô cho một giờ.
Do you need more time? Like I think it's been like 7-8 minutes. Maybe it's not enough. Mr. Kian has finished, but we know he's quite fast. So it doesn't mean that everyone had the time to finish. Do you need like 5 more minutes, or can someone in the chat confirm that you need? Yes, okay, no problem. So let's say 5 more minutes. 5 more minutes, okay?
cost per unit of input. Hay là lấy 30 à? 30 giờ, 30 đồng 1 giờ cộng với cả 200 nhân với cả 0.2 giờ. Machine setup. Operation. Đằng trước nữa hả? Em định tìm thêm cái gì? Để lấy. Không, nó chẳng thầy không nói gì nhiều về cái đoạn đấy. À đây này, direct labor budget đúng không?
Anh hiểu ơi,
Cost
anh có tai nghe không?
Đây mình có cái direct labor budget này là casual bằng red hot, là hai loại sản phẩm thôi. Làm cái red hot là casual. Có chứ. Và nào cái đi 4 có casual và deluxe đây còn gì. Thì em đang có hai có chứ. Red Oak là cái này như nhau em. Cái label này làm cái sản phẩm nào như nhau, nó liên quan gì đến material đâu, nó chỉ liên quan đến là cái công em làm ra một cái là bao nhiêu thôi chứ. Còn làm hai cái bàn giống nhau mà chỉ khác về nguyên vật liệu thì nó như nhau chứ. Đúng không? Total setup hour, direct cost quantity, direct cost product, casual. Thì đầu tiên là phải có unit à? Có khi nên như thế nhỉ. Quantity of table to be produced, number of table per batch. Cái đoạn nói per batch này ở đâu nhỉ?
Okay, so there is one mic open. So please mute, please. Mitran. Thank you. Okay, so I think it's time to move on. So we get some answers. I got the same answer that Mr. Kien, manufacturing. So let's see if you have the same answer. If you have the same answer as Mr. Kien, it's correct, because what shared Mr. Kien and also Luong was correct. So that's correct. So that's correct. So I think it's enough time. We need. I think it's a good timing now to see that the solution of this together, because we have all the steps afterwards to discuss. Let me close the door. Sorry. So okay. So I'm gonna share my my screen with the with the what I call the work in progress file, the WIP file, which is taking the same template than you and do it again. But I also have the official solution on the other screens to check that I don't say mistakes, you know. So it's easy for me. Anyway, it's also to say the good thing at the first time, so you don't get confused. Okay, so we can move on. So now the idea is to calculate what the production cost of 1 unit of casual and 1 unit of deluxe. Let's begin with casual. Okay, so we got 3 things, right? The cost per unit, the input per unit, and the total. Okay, so the cost per unit, we have 5 elements, 3 direct costs and 2 indirect costs. Okay, so let's begin with the direct one. It's easier. So the Red Hawk will be actually, what is the cost per unit? Well, we go and check for the data, right? It's going to be 7. No, maybe it's not here that I should take it. I should take it here. I should take it here. Yeah, here.
Phải có material nữa đúng không? Và có direct.
For the number of units of output, well, we need to remember each time we make one casual, how many Red Hawk we take. We have to take 12 board feet of casual. Okay, so each time we manufacture 1 unit of casual, we have in the cost we have $84 of Red Hawk. Okay. So for the granite, of course, the same thing. So what is the cost of the granite? So it's 10. And the number of units is for the casual table. So granite is 6. Okay. This one. Okay, so just checking for where I should take the 7. Why we take the number of cost per unit input from book material? Yeah, so that this is what I was because actually, if you have, I was checking where to put it. Because if the price was different from the previous period, I would have something different here. Just checking, huh? Yes, because if we how to explain, because if we have a different price for the beginning inventory of Red Hawk, we have 70,000. So where do we have it? The 70,000 is here. Yeah, it's here that we would have a difference between, because we would take Red Oak from, if we have a, let me think. Well, here it's not a problem because we have the same cost, but no, actually, yes, okay. I know why. I know how to explain it at least. Because we say that in the data we use first in first out method. Where is it? Here we use first in first out method. Okay. So certainly what we have in the ending inventory budget is made of the last purchases of Red Oak, right? Because we firstly use usually the beginning inventory to include in our production, and then we use the newly bought units of Red Oak. So here it's not a prime because everything is $7, okay? But if later we have, like for example, in the beginning inventory it's $7, and then later on we buy it $8, okay? It means that the amount, the Red Oak that will stay in our ending inventory will be made of Red Oak that we bought at 8, okay? Because the 7 has been already sold, okay? So that's why we take the cost per from the material and labor cost budget instead of data, because just in case it's a different price, it's a different price that we buy the Red Oak, okay? So here again, the units of Red Oak that we have in our ending inventory is the last Red Oak we bought, right? So if it's at a different price, we should have the different price here, okay? So that's why. Okay. And okay, and so actually it should be this one that we take, because it would, according to what I just said, because that would be the last price we paid, for it. And so for the same explanation, huh? So direct manufacturing labor. So how much we need to take for the manufacturing labor? So we need for 1 unit of casual. So this time is no big deal. So we need 4 hours, right? For 1 unit of casual. And the price we pay each time is $20. Okay, so no problem with that. Then for the manufacturing overheads. So remember, manufacturing overheads is also, it's, cost per unit, sorry. I'm a little bit confused today. $20, I inverted the 4 and the 20. So the quantity is 4 and the cost per unit is 20. So for the manufacturing overhead, we know that the cost per unit of the cost driver is determined here. It's 30, right? Okay. And so the driver is the number of labor hours as well. So it's the same number than the previous one. Okay. So sometimes students, they have problem to understand why we take the 4 here and the 4 here. Well, we are not talking about the same cost, right? Here, the $80 that represent the cost of direct labor that we use for for one unit of casual. Here, the 120 obviously is the indirect manufacturing overhead for one product. Okay, and the way we measure this activity is that we say that each time we spend 1 hour of labor, we have to allocate $30 of indirect manufacturing cost to the product. Okay, so here it's just the unit of measure of our manufacturing activity, which is also labor hour. Okay, so that's why there's the same. And for the last one, for setup, so each unit of setup is $200. And what does it represent? It represents the number of setup hours for one unit. So I think we have it here somewhere. Don't we have it? No, we don't. Okay, so let me check. So manufacturing cost B7. Manufacturing overhead cost B7 basic. Yes, okay, sorry. Sorry, I forgot. So we have it here in the previous one. So yes, so we determined that here. I didn't discuss that table. So we have this table, which is in the case as well. And they say that for casual tables, we need to produce 60,000, $50 number per batch, 50 tables per batch. So we need 1,200 batch. Setup time per batch is 10 hours, okay? So total setup hours is 12,000, and the setup per table is 12,000 divided by 60,000. So each time we manufacture one table of casual, we need 0.2 hours of setup. Okay, so that's why I take the 0.2 hours. And just to be clear, this is an information which is in your case. So it's not something I invent or whatever. It's just a table that is provided here, okay, that I didn't discuss earlier. Okay, so Statistic Manager forecasts the following setup information for casual and deluxe. Okay, so the calculation is already done. 0.2 is 0.3. Okay, so this is where this is where I pick up my information. Okay, so just to be clear, so I can put already 0.3 here. Okay, so I don't have to go back. Okay, so we got 344. Is that correct? Or it doesn't ring a bell. It's 384. So no, because I forgot. Okay, I need this formula to be done. Okay, so what we say here is that the production cost of one unit of casual is 384. Okay, so that begins to be a very interesting interesting information for us, right? Because so we can provide that information to the financial accounting so they can evaluate the inventories at the end of the period already. And we have a pretty good idea about the production cost of one product. So maybe we can even use that, you know, to determine what could be the good selling price for the product, right? So that's interesting how management accounting can be useful for us to determine, you know, the production cost of one product, so we can maybe, you know, deduce what could be a good selling price of one product. And this has been possible because we've been able to allocate the indirect cost to the products, among other things. Okay, so let me do the same thing for the deluxe. So we have some red oak. So the cost per unit is 7 as well. Okay, the number of units we need is 12. Yes. We need some granite as well. And the number of units of granite is higher because it's a deluxe product. The cost per unit of labor hour is 20, and the number of hours I need to do for it's also a little bit higher because it's deluxe product. The cost for 1 hour of manufacturing indirect cost is 30, and for the setting up it's 200. Okay, and the number of hours I need to it's a number of direct hours, and 0.3 again is something I take from this table here. We need 0.3 setup hours to do one deluxe step. Okay, so we have everything we need. And so it gives us 524. Okay, so this is for the two finished goods. So do you have any question about this one? Okay, seems okay. Did you have the time to do Schedule 6B as well? So here is just to summarize the information about what is the total ending inventory that we have. Did you have time to do Schedule 6B? Can I correct it? Or do we need some? Do you not yet? Okay, so I give you 5 minutes, then I correct. Okay, so it's 8:30. It's 8:13. So let's do it. So 8:20, I correct it. 8:25 or so we have the break. Okay, so I let you 7 minutes to do this. So we finish this table, this ending inventory budget before break. Okay, it's just here. It's very easy. Huh? It's just what we want. It's to here we have a cost per unit, right? So now you need to find the information about what is the quantity we expect to have for casual and deluxe in the data here. Okay, targeting ending inventory, you have it here. Okay, so you can have the value in dollars of the ending inventories that you can put in your balance sheet, right? And same thing for the red oak and granite, which are our raw materials, right? We need to pick up the quantity of red oak and granite we want to have. Okay, so for the targeting ending inventory of the product, it's here. Sorry. So for the granite, the targeted inventory in quantity is here. Okay, and you just need to find the cost per unit, which is certainly 7 and 10. So you can have it in your document here. Okay, so I let you 5 minutes and we discuss the solution.
Cái bạn thầy vừa nói là quantity là bao nhiêu nhỉ? Ending trừ với ấy đúng không? Mà lại phải khó khăn thế nhỉ?
Em tưởng đấy chỉ lấy cái số ending balance ở bên lấy số purchase ở bên cái bảng.
For your information, it seems to work again, my UCAM account. So I'm gonna quit the meeting and come back as a host, and I'm gonna launch the recording. So to the student who offered to record, thank you very much. And in a few minutes, when I say so, you will be able to stop. Okay, so I say you bye-bye, and I come back. Leave.